Bank Negara Malaysia has raised the overnight policy rate by 25 basis points to 3% as the central bank believes the global economy continues to be driven by resilient domestic demand. The rate hike, after two consecutive pauses in early 2023 at 2.75%, came as a surprise after most economists had predicted that BNM would maintain the OPR level to further assess the impact of the four straight increases to the key rate last year. Following the quarter percentage point hike on Wednesday, the ceiling and floor rates of the corridor of the OPR are correspondingly increased to 3.25% and 2.75% respectively. BNM said that with domestic growth prospects remaining resilient, the Monetary Policy Committee judges that it is timely to further normalise the degree of monetary accommodation. With this decision, the MPC has withdrawn the monetary stimulus intended to address the COVID-19 crisis in promoting economic recovery. The central bank said that in light of the continued strength of the Malaysian economy, the MPC also recognises the need to ensure the stance of the monetary policy is appropriate to prevent the risk of further financial imbalances. The latest rate hike has raised the OPR back to its pre-pandemic level seen in the second half of 2019. During the thick of the pandemic, BNM had cut the key rate to a record low of 1.75% to help to support the economy. With the OPR level again at 3%, BNM says the monetary policy stance is slightly accommodative and remains supportive of the economy. BNM said the latest developments point towards further expansion in the first quarter of 2023 after the strong performance in 2022. Household spending remains resilient, underpinned by better labour market conditions as unemployment continues to decline to pre-pandemic levels, while the pickup in tourist arrivals is expected to lift tourism-related activities. The central bank believes further progress of multi-year infrastructure projects will support investment activity. While BNM said the resilient domestic demand was supported by strong labour market conditions and a stronger than expected rebound of China's economy, it notes that the global economy continues to be weighed down by elevated cost pressures and higher interest rates. As such, most central banks are likely to remain in a tight monetary policy stance, given that core inflation has persisted above historical averages despite moderating headline inflation. The European Central Bank and the US Federal Reserve will be announcing their latest monetary policy decisions on May 4th. After nearly 5 months since announcing the 5G rollouts review, the Unity government has decided to maintain the status quo and continue with the single wholesale network model under Digital Nasional until 80% coverage of populated areas or COPA. Communications and Digital Minister Fahmi Fadzil told the press on Wednesday that upon reaching 80% COPA by end 2023, the rollout will shift to Phase 2, where the nation will move to a dual wholesale network model. Under the DWN shift, a separate entity, which Fahmi merely dubbed as an Identified Entity B, will start developing the nation's second 5G spectrum network as early as January. He explained that the decision was made with a shift in focus to elements of adoption and innovation based on comprehensive 5G technology. Fahmi adds that the model also takes into account the sustainability of the telco industry in Malaysia, thus ending the monopoly element that is often associated with DNB. According to Fahmi, the nation's 5G network COPA has reached 57.8% currently from 54.7% as at end February, leaving only 22.2% or another 2,000 sites to be covered to achieve the 80% milestone. Touching on the government's involvement in Entity B's 5G network, Fahmi said the government will not be involved in commercial considerations such as network equipment use, staff employed and corporate structure. However, he notes that the 12 cent to 13 cent wholesale price per GB under DNB will serve as a benchmark for the entity, while its retail price to consumers will be regulated under the mandatory standards on access pricing. Meanwhile, Telekom Malaysia, CelcomDigi, U-Mobile and Maxis have all welcomed the government's decision to implement the DWN model once the 80% COPA target has been reached. CelcomDigi, TM and U-Mobile all released similar statements of support, saying that the ultimate goal is 5G accessibility for all Malaysians. Maxis, the only mobile network operator yet to ink an access agreement with DNB, says it looks forward to providing 5G-related products and services to its customers soon, with a focus on affordability and adoption. Bursa Malaysia's net profit for the first quarter of FY 2023 declined 17.4% year-on-year to 56.17 million, primarily due to lower securities market operating revenue. Quarterly revenue also came in 5.3% lower year-on-year to 156.5 million from 165.3 million a year earlier. Bursa said its securities market operating revenue fell 13.4% to 100 million from 115.6 million for the first quarter of FY22 due to a decline in trading revenue, with the average daily trading value of on-market trades and direct business trades amounting to 2.3 billion against 2.7 billion previously. Meanwhile, Bursa's total operating expenses rose 10.6% to 80.2 million from 72.5 million previously due to higher marketing and developmental expenses, technology costs and depreciation expenses. CEO Datuk Muhammad Umar Swift said that the first quarter of 2023 proved to be a challenging period for the capital markets due to various macroeconomic factors, with the security markets ADV returning to pre-pandemic levels compared to the first quarter of FY 2022. He adds that the boss will implement initiatives to improve operational and cost efficiency while being steadfast in strengthening the market ecosystem and introducing new offerings to enhance market vibrancy and attractiveness to investors. Meanwhile, Umar said that Bursa recorded a significant increase in listings, with 10 initial public offerings in the first quarter, double the number of IPOs in the first quarter last year, indicating improved market sentiment and showing companies' confidence in Bursa as a valuable fundraising platform. Umar adds that the recent introduction of the Leap Market Transfer Framework will enhance the market's attractiveness and facilitate greater market access to more established small and medium enterprises. Malaysian Class D driving licenses can now be renewed for up to 10 years from 5 years at present, but it is only applicable for Malaysian citizens and not foreign nationals or any other pass holders. Transport Minister Anthony Loke said Malaysian driving license holders can renew their driving permits for the maximum duration for a special renewal fee of 270 ringgit. Loke explains that MOT is giving a discount of 10% for only 10-year renewal, in which license holders can enjoy the privilege of a free fee for the 10th year. At present, it costs 30 ringgit per year to renew a Class D driving license, with a minimum renewal duration of 1 year and a maximum of 5 years. A 10-year renewal would, under normal circumstances, cost 300 ringgit. Loke said the Road Transport Department or JPJ system is ready for the projected high volume of renewal applications, and that the public can opt to renew their driving licenses for a period of between 1 to 10 years. According to 2021 data, the latest available, JPJ collected 4.04 billion in revenue, derived largely from road tax and license renewal charges. Loke also announced that the MOT will grant special permission to any license holders whose validity period has expired to renew their respective permits without having to retake the driving test. He said this initiative is only applicable to Malaysians whose driving license expired from January 1st, 2018. Loke said this initiative is expected to benefit some 1 million drivers with expired licenses. Sapura Energy has filed an appeal to the High Court over the Session Court's decision last month, which allowed Economy Minister Muhammad Rafizi Ramli to obtain documents related to the remuneration and incentive package paid by the company to its former CEO, Tan Sri Syahril Samsudin. Sapura Energy filed the notice of appeal dated April 25th against the overall decision by Sessions Court Judge Lailatul Zuraida Harun, aka Harun, on April 14th to allow the third-party discovery application by Rafizi, who is also the Member of Parliament for Pandan. The company took legal action after Lailatul Zuraida fixed May 15th for parties to update the court on their adherence to her decision. The notice appeal by Sapura Energy, which is an aggrieved party in the proceedings, was filed through Messrs. Rahmat, Lim and Partners. Rafizi is facing a defamation suit from Syahril over statements he made that were published in 3 articles via his social media accounts in reaction to ex-PM Datuk Sri Najib Razak are asking the government to save Sapura Energy by injecting more funds into the ailing oil and gas group. In his defense to the suit, Rafizi claimed he was justified in raising the matter and that Shahril's remuneration when he served as the CEO did not commensurate with Sapura Energy's financial performance.